Hello everyone, welcome to the weekend session of ABM. In weekend session, I'll be covering important theory questions today, plus some numericals at the end. Case studies, MCQs, we cover everything over here. All the PYQs are covered. So watch the video till the end, share it with your friends, like the video, subscribe to the channel. Okay, click on the bell icon. Today, as I told you, I'll be covering some important theory questions related to module C. Module C. Okay. So watch it fully. Watch it till the end. Okay. Let's start. Which of the following is not typically considered a type of borrower for a bank? Not considered a type of borrower. So who is not a type of borrower for the bank? Not considered as a type of borrower: individual, partnership firm, HUF, and NGO. So who is not the type of borrower generally? Think everyone. Not the type of borrower. Let me see in the comment section the answers. The answer is NGOs. They generally don't borrow from the bank. Borrow. They can have an account, but borrowing is not there, isn't it? Remaining all can borrow. Individual can borrow, partnership can borrow, HUF can borrow. Why does an NGO borrow? Anyone can tell me? Why does an NGO borrow? Not only NGO, look at this. Trust also. Trust. That also doesn't borrow. Why? Why don't they borrow? Also, let me see some example of cooperative society. That also generally does not borrow. See, that can borrow, but generally they don't borrow. See, if you go by rule, any of these can borrow. It's not that they will never ever borrow. They can borrow, but generally they are not seen as a borrowers. Even cooperative societies. Why? The reason? The reason is these all organizations, NGO, trust, cooperative societies, don't work for profits. Kindly note this. Whatever profit they get, that is distributed among the partners or shareholders or the members. So they will never have the profit as such. Okay? NGOs will never have the profit, trust will never have the profit. Check this. So that's why they are never generally the borrowers. Loans being given to small scale industries, agriculture, small businesses, etc. are generally classified as. So loans to MSMEs, agri, etc. means individual housing also. Individual housing or infrastructure. These are classified as what? Loans to commercial sector, loans to software, loans to priority sector, and loans to public sector enterprises. Simple, isn't it? Priority. Okay. Priority sector advances. Kindly note, priority sector advances are mainly divided into three types: agri, then MSME, and DRIs. Mean differential rate of interest. Generally, these are the categories. Okay. Teaser loans are characterized by. Now, what is a teaser loan? Firstly, understand the meaning of teaser loan. Teaser loan means, see, normal loan, how does a normal loan work? Normal loan means what? This is my loan. Let's say I give you 10 lakh rupees. Okay? 10 lakh I give you now. Let me write it bigger. Let's say I give you 10 lakh rupees right now. 10 lakh. In 10 lakh rupees, the EMI starts immediately with full amount. With whatever this amount is, it is equal EMI. Okay, equal EMI starts from start till end. Teaser loan means if I give you 10 lakh rupees loans, teaser. In teaser loan, and this is normal. So if I give a teaser loan, the EMI first is, initially it is low EMI, and later it is high. Okay. Initially the EMI is low, later it is high. That's called as a teaser loan. Teaser loans are generally allowed in NPA accounts which are under rehabilitation. Generally are under that. New commercial loans are generally not allowed to give this teaser loans. So teaser loans are characterized by fixed interest rate throughout the loan tenure, interest-free payments for the initial period, low interest rate in the initial period and increasing after a promotional period, a single bullet repayment at the end of the loan period. Okay. RBI has stopped, means RBI has given the warning to the banks who are offering new home loans as teaser loans. New home loans. Because what happened? They used to attract the customers initially. Buy the home loan with as low as 1,000 rupees, 2,000 rupees EMI, or as low as 5% this rate of interest, 4% rate of interest. That was a big hoarding given. So customer used to get attracted. 4%, my God, run. But later, initially it was 4%. Later it went to 11 and 12%. So this was a trap. So that's why teaser loans have been stopped. Means RBI is not allowing fresh loans to be given as this. Only under rehab and this NPA rehabilitation you can give it. What is the repayment of entire loan principal at the end of the loan period called as? Entire loan principal at the end of the loan. End. Annuity, compounded payment, balloon payment, term payment. Entire loan at the end of the period is called as, balloon. Okay. I've seen many of you have given this answer, balloon. What is the other word to this? In exam, they will not only ask you balloon, they will ask you another word. What is that other word? Let me see how many of you can answer this. Other word I want. It's not given in the options. Okay? It's not given in the options. So what is that other word? Think. It is bullet. Bullet, very good. Some of you have given this, bullet. Bullet repayment. Either it's called as bullet or balloon, anything. Okay? Which of the following statements accurately describe the deferred payment guarantee? DPG. What is the DPG basically? What is the meaning of this DPG? Deferred payment. Deferred means what? Deferred means later, generally in installments. Generally I am saying, not always. Generally in installments. In deferred payment, you will never have a bill of exchange. In deferred payment, you will never have a bill of exchange. Okay? It is generally in installments. Means like, for example, home loan. Whenever you have a home loan, the guarantor gives you the guarantee. What does that guarantor give you actually? That guarantor gives you deferred payment guarantee. Because what is that guarantor saying? This person will pay your EMIs regularly. EMIs means what? This guarantor is saying he will pay the deferred payment guarantee. And if he does not pay, then I will pay that entire amount, whatever it is. Isn't it? That's the meaning. So deferred means installments. Okay, generally. Again, I am saying generally, 90% installments. In trade finance, if you see in BFM, you have a deferred payment arrangement, but that does not include installments. That includes one-stroke payment in future. That's why I am saying generally 99% it's installments. So loan of 10 lakhs and then EMIs deferred. So it's a fund-based method of financing purchase of fixed assets. The bank provides direct loan to the purchaser of the fixed assets. The bank guarantees the purchaser's repayment to the supplier of a fixed asset according to the agreed schedule. It's a type of unsecured loan. So See here, the example which I gave over here was home loan means customer took the loan and you are the giver. You are this creditor. Here the case is separate. Your bank is giving the guarantee. What is the answer for this? It is a fund-based method for financing purchase of fixed assets. See, this is generally in your normal loan. The correct answer over here is agreed schedule, EMIs, isn't it? Now you will say, see here, let me give you some additional information about this. It's not there in this question. How will you do the processing, analysis of deferred payment? How will you do it? Kindly note, the analysis of DPG is done in the same way as it is done in the term loan, normal term loan. It is done in the same way. Why? Because after all, the repayment has to be made. You have to check, right? You have to check whether this term loan EMI is repayable, isn't it? So the analysis of DPG or deferred payment guarantee is done in the same way as you do the analysis of term loans. There also DSCR is required, here is also DSCR is required. Again, got this point everyone? Which of the following is covered under the SARFAESI Act for the recovery of the defaulted loans? Covered. Agri loans, loans to government entities, secured loans and unsecured loans. Who are covered under SARFAESI Act? Firstly, what is SARFAESI Act? SARFAESI Act was applicable in 2002, means it started in 2002. Okay? One of the best acts for the bank, one of the best acts. Okay, mainly for the retail loans, means branch loans, mainly. For big corporate loans, we have now 2016, okay, this Insolvency and Bankruptcy Act, 2016, for corporate ones. One of the best acts, that also, for companies. SARFAESI. There are many. SARFAESI is there, DRT is there, IBLC is there. Okay, all these three acts are one of the backbones of the banking industry. Because of these acts, what has happened? Banks are able to recover the funds very fast. Otherwise, it was earlier tarikh pe tarikh. Huge delay. Right? So, this is mainly for retail loans in the branches. Housing loan per this other this company loans in the branches. You can take care using this SARFAESI Act. But kindly note, SARFAESI Act is applicable only where you have a security which is secured loans, which is security which is what? Which is what? That security should be charged in the name of the bank. Charged. Kindly note, charged in name of the bank. Bank. Security which is charged in the name of the bank. Means what? Means what? What is charged in the name of the bank? Which is a security? Suppose let's say house, then mortgage. Not only house means not only house. It can be this shop also, any fixed asset, or which is fixed asset means which is a non-moving asset. Mortgage. It can be a car or vehicle. Okay. So that is under hypothecation, HP. Hypothecation. Okay. So this can also come under SARFAESI Act. Okay. Third one is also there, pledge. Pledge can be used under this. Fourth one is there, assignment. It can be used. Okay. But lien cannot be used. Because lien is your own FDOD. Lien cannot be used. So there should be a separate asset, someone else's asset. FD is your bank only. So why should it go to SARFAESI? Directly break that FD and move on, isn't it? But remaining four, mortgage, hypothecation, pledge and assignment. These four, the assets are of somebody else. right? In assignment, the asset is generally the LIC policy or NSC. In mortgage, it is a asset which is non-movable. Hypothecation, movable asset. And pledge, it is generally for warehouse or gold. Okay. So, secured loan, okay, under SURFACE Act. Which of the following are examples of non-fund based credit facilities? Non-fund. Look at the options. Term loan, working capital, OD and cash credit, LC and bank guarantee, invoice discounting and bill purchases. Think. Non-fund based. It is LC and bank guarantee. What is the non-fund based? Non-fund based means Mary, what is that? That Maheshmati? There was a dialogue, no? मेरा वचन ही है मेरा शासन, isn't it? मेरा वचन ही है मेरा शासन. वचन, LC and bank guarantee. मेरा वचन, I give you the guarantee that I will make the payment once you give me the documents. मेरा वचन. That is LC and bank guarantee. Okay. So in non-funded, you actually don't give the funds. You only give the word or guarantee. Payment means payment guarantee. But kindly note, non-funded can turn into funded. Non-funded can turn into funded if the person on whose behalf you are giving the guarantee does not perform. Then it can turn into funded. You'll have to give the funds in that case. Okay? In bank guarantee, the bank commits to directly provide the funds to the borrower, guarantee the borrower's performance or financial obligations to the third party, purchase the borrower's outstanding invoices, offer a flexible line of credit for daily operations. So in bank guarantee, what is given by the bank? Yeah? What is given by the bank? Guarantee, isn't it? Guarantee the borrower's performance or financial obligation to a third party. How does the bank guarantee work? See, generally we have this example of contractors coming in a branch. You might be having this road contractors coming in your branch, road or any contractor. So what happens? This contractor, this is the contractor. This contractor wants to get a contract from, let's say, any state government, okay, from government. He wants to get a contract from the government. But government says, what is the guarantee that you will do it? So, this contract is to be given, okay. So, government says that either give me a fixed amount, okay, either give me the fixed amount or bait money we call it, or give me a guarantee from your bank, nationalized or any commercial bank, scheduled bank. So from the bank, what happens now? This bank will give the guarantee to this government that this contractor will build that road. Suppose if he does not build that road, then this bank will have to pay. In that case, this non-funded becomes funded. A standby LC is typically used for. What is the use of standby LC? Many of you might not have heard this name, standby LC. What is the use of standby LC? Yeah, what is the use of standby LC? It's typically used for a primary source of funding for a business, a backup payment mechanism in case the applicant fails to fulfill the obligations, a loan for acquiring fixed assets, a facility for managing inventory costs. Many of you I have seen they are taking this inventory cost. Why? Because this is something different. These three we know, so this answer. But kindly note, I'll give you one simple trick. SBLC or standby LC we call it, SBLC equals to guarantee. Simple trick to remember. SBLC and guarantee are same, no change. No change in their working, no change in anything. Now you'll say then why two names? See, the logic is very simple. This SBLC name word has come from Europe and USA. Europe and USA. These countries and these continents, whatever you call it, they say that bank can't give guarantees. So that's why give SBLC. But what is that? Same as guarantees. So they are just playing with the words. In our country, Bharat, we simply say that yes, bank can give the guarantee. After all, here also they are giving the guarantee only in different name. Instead of calling this Ram, I will call him Sham. That's it. But after all, work is same. So remember this. So answer is backup payment mechanism in case the applicant fails to fulfill the obligation. Same as guarantee, isn't it? A key advantage of using non-fund based credit facilities for a business is non-fund based. What is the advantage? For the customer, directly accessing the cash for operational expenses, preserving working capital while offering assurances to the clients and suppliers, achieving low debt to equity ratio on the balance sheet, avoiding the need of collateral security. Yes. Which is the longest answer? B. So this will be the answer, isn't it? This will be the answer. Is it? C is the answer. Achieving low debt to equity ratio on the balance sheet. Low debt to equity. Why? Because if I take non-fund based, okay, what have I taken? I have taken a guarantee from you. Have I taken the loan from you? Up till now it's non-funded. You have not given me the loan. So it will not reflect in my balance sheet, in my liabilities. It is a liability for me. For you it's an asset as a bank. But for customer it's a liability. So it will not reflect in this liability for me. So debt will be low. Isn't it? So now, before going, everyone, kindly join the new Adda 24/7 batches. Join them ASAP. In the batches, see, the new latest batch has just now started. Okay? Age batch. So, if you look at this, join this age batch. In fact, I would suggest you to join the CIB Increment Mahapack. Double validity offer is going on. If you buy for 6 months, you get it for 12 months. Double validity. Huge offers are going on. Okay? Check the offers. Okay. And look at the discount part. Put the code Y432. Put on the write on the see this 79% discount plus 1% extra through the app. Always purchase through the app. In the app you are getting 1% extra always. And what do you get in Increment Mahapack? Here you get physical books, physical question banks as well as e-question banks, both for all the compulsory subjects. Then you get formula bank, physical as well as e, both. Then you get the study planner for all the subjects. So it's one of the best for you. And 15 plus batches per subject means 15 plus means you basically go through the 15 times revision. So that's one of the best things for you. You should always purchase this. Also, I would suggest you must purchase the ACE batch. Look at this. ACE batch. E-books, mock test, online live classes, recorded sessions, everything you are getting. So, join this ASAP. And recorded sessions are very important because if you miss out on some day because of some problem, bank pressure, you can definitely go through the recorded ones. And always remember, never forget the code Y432. Y432. Okay? Click on enter. Look at this 79% discount plus 1% extra. So don't miss this also.